Good morning, I'm Gary DeWall, and this is Bridging the Week for October 16th to 20th, and today is October 23rd, 2017. Last week, the Commodity Futures Trading Commission endeavored to explain virtual currencies as simply as possible, including their purpose, regulatory oversight, and risks. In my view, they did a pretty good job. Additionally, CME Group issued two advisories, one on pre-open orders, and the second on exchange of futures for related position transactions, warning of conduct that could constitute disruptive trading, and eliminating a current obligation on future commission merchants. Last week, I attended both the big CBOS banking conference in Toronto and the FIA Expo in Chicago. So I can now rest and get ready for the beginning of the World Series. Let's get started. Last week, the Commodity Futures Trading Commission, Lab CFTC, issued a helpful overview of digital currencies, discussing what is a virtual currency and how digital currencies and distributed ledger technology might be used, the role of the CFTC in the oversight of virtual currencies, and risks of transacting in digital currencies, as well as suggestions to mitigate such risks. Among other things, the Commission noted that, under relevant law, the definition of commodity, quote-unquote, is broad, and that the CFTC has determined that virtual currencies constitute commodities since 2015. As a result, said the Commission, the CFTC's jurisdiction is implicated when a virtual currency underlies a derivatives contract or when there is fraud or manipulation in connection with a virtual currency traded in interstate commerce. The CFTC acknowledged that the Securities and Exchange Commission has said that certain digital tokens may be securities of the federal securities law, but said, quote, there is no inconsistency, end of quote, between the SEC's analysis and the CFTC's determination that, quote, virtual currencies are commodities and that virtual tokens may be commodities or derivatives contracts depending on the facts and circumstances, end of quote. The CFTC noted that one of the purported advantages of the distributed ledger, that they are immutable, may not be true, and that persons transacting in virtual currencies could lose their assets should the digital wallet holding their private key be compromised, for example, through a bad actor gaining unauthorized access. By the way, the private key is the secure digital code used to access owned cryptocurrency. Lots of folks want to take a crash course in cryptocurrencies and distributed ledger technology. For some of my high-level thoughts, see the Bridging the Week website. Check it out. CME Group issued a new market regulation advisory notice regarding the placement of orders during the CME Globex pre-open, as well as an amendment to an existing MRAN identifying the required time for reporting of exchange-related position transactions and the obligation of clearing members for EFRPs by their customers. Both MRANs are scheduled to be effective November 2nd. Under its new MRAN, CME Group advised traders that no market on open orders may be placed on Globex. Alternatively, traders may place orders prior to the Globex open with a specific price or by giving a broker or other party who may handle customer orders complete discretion over price and time of execution. Such an order, known as a DRT order, would give the order executor full discretion to execute all, some, or none of the order. The CME Group cautioned that persons placing orders during the pre-open, materially above or below the indicated opening price, might be deemed to engage in a disruptive trading practice, as such order might cause, quote, aberrant price movement, end of quote, during the relevant time period. Separately, CME Group indicated that absent, quote-unquote, mitigating circumstances, all EFRP transactions must be submitted to the exchange for reporting as soon as possible, but by no later than end of business the day that the EFRP was executed. Under the relevant MRAN amendment, clearing members would no longer have to apply, quote-unquote, due diligence to determine if a customer's EFRP was legitimate. However, a clearing member would be expected to take, quote, appropriate action, end of quote, if it had actual or constructive knowledge that an EFRP was non-bona fide. And finally, two CME Group exchanges brought disciplinary actions against 3 traders for alleged spoofing conduct. Separately, both Shan Kwon-tang and Antonia Simoes, non-members, were judged by a Business Conduct Committee of the Commodity Exchange, Inc. of engaging in spoofing-type transactions involving the placement and cancellation of layered orders on one side of the market without the intent to execute such orders. Neither person answered formal charges levied against them by Comex. Mr. Tang was required to pay a fine of $50,000 and disgorge profits of over $35,000. Ms. Simoes was required to pay a fine of $50,000. Both respondents were also permanently barred from trading on any CME Group exchange. Well, that's it for this week's edition of Bridging the Week. As always, there's more information in each article and more articles on the article version of Bridging the Week on the website. Check it out. I'm Gary DeWall. Have a great week. Enjoy the World Series. And until the next edition of Bridging the Week, ciao.